Welcome to In My Toolbox. This is the weekly talk show that will help you learn on how to maximize and optimize your hard-earned money, and of course, to be able to build a dependable future for you and your family. But always, guys, as I always say it, in any idea that will transpire in this show, always consult with your financial advisors, insurance professionals, or tax consultants. Just want to make it clear like that. Good evening again. My name is Enrico Pobre. I'm a sales, marketing, and trainer, an economist, an entrepreneur, and a financial professional. So In My Toolbox is going to be your go-to weekly talk show that will discuss, of course, personal finance and other money matters. So we will tackle important information not taught in school and is, of course, much needed to empower you and every household in this great country. So we will unbox financial strategies and process on how to accumulate, preserve and protect, and of course distribute on hard-earned assets. This is what you call the three faces of money. So while we are focusing on looking on ways on how to make more money, adding money, we will have to understand and be educated on those three faces of money. So by the way, if you have questions, ask them away on the chat box that you will see in the show, or if you will be listening to the show in a later time, please feel free to contact me through Facebook page In My Toolbox, connect with me via Instagram or LinkedIn. Just simply Google my name, probably Enrico Pobre. You'll find me there. So I'm not, hard to find. So you can email me at enrico.inmytoolbox@gmail.com. You can download the app on your smartphones or simply go to PHLV Radio on your Facebook. You can also access us through podcast platforms like Spotify, iHeart, and Apple Podcast. Okay, so our topic today, my God, guys, we are going to debunk the stigma of life insurance. So I have a special guest for today, and he's actually a good friend of mine. We've known each other for about, almost 10 years now. He's a CEO of YT Phoenix and Rising Business Solutions and IFR Global. He's a certified financial educator, and for over a decade, his firm have been helping several thousands of families and business owners to improve their finances. That's you and me, guys, right? Okay. So his the firm are winners of multiple awards, and they have been recognized as the best in service for many years, including a National Recognition Award. Again, National Recognition Award with the NAACP for empowerment programs. So they provide tax, accounting, and financial planning services. So he also worked as an executive with top financial firms. Prior to working in the financial services, this is what we, Johan and I, myself was talking about a while ago. He worked for the TV industry as a producer for 15 years for CBS, UPN, and CW. So camera is not something that is new for this guy. Let's all welcome my good friend, Mr. Sean Toll of Virginia Beach. You're on show now, Mr. Sean. Go ahead. Say hi to everybody.
Thank you. That's an awesome introduction. Thank you, Enrico.
I love you, man.
Hey, this is great to be on, man. I feel honored. I thank you for inviting me on.
My pleasure, man. I'm actually excited and looking forward of discussing things with you, not just on a telephone or a webinar, but now this is different platform, Sean. So we are on a radio, internet talk show. So, man, this is a level up for you and me. Okay, so the title of our show today, Sean, is Debunking the Stigma of Life Insurance. So you and me, we've known each other and, in the industry, and we've been, dealing the marketplace about life insurance. Okay, so probably have a little, some questions for you, just in your experience all these years. Let's talk about the stigma of life insurance. Why most people don't like to talk about life insurance? What do you think so?
This is funny because I think, and you probably agree with me, no matter what's the culture or where they come from, everyone say they don't like to talk about life insurance. Have you kind of saw the same thing, I don't know, as me, right? No matter where they come from or whatever, no one want to talk about death, right?
Exactly.
I think that's the reason. They don't want to feel like, hey, I'm going to pass away, and they'd rather just ignore it, even though we know this is the one thing that everyone gonna go through, right? we all gonna go away at one point. We're gonna pass away at some point. However, ignoring that and just focusing on today or tomorrow is what most people think about.
Yeah.
And I think that's the reason why so many people have the stigma, or so many people from all cultures have the stigma. I don't know about you, but in the African American community, nobody want to talk about life insurance. Nobody want to talk about life insurance. And it's like, but it's with every culture. I haven't found a culture yet that says, "Oh yeah, tell me about that."
I remember there was this thing that when you and I we were running this business back in the East Coast. People were saying, "Okay, if you want to get rid of somebody, tell them you're selling life insurance." Is that true?
Yeah, that's one of the quickest ways to say, "Hey, don't come in."
He's a life insurance agent. You don't want to talk to that guy. But the truth is, different people has different perspective about life insurance. I even met some people, just for me talking to them about life insurance, saying, "No, I'm not gonna die." But probably we've been too old enough in the industry that we know that there are only two things that are so sure is going to happen in this world. One, we all die, and the other one's taxes. So, that's the reason why I love to talk about this topic with you, Sean, because we have tons of experience about this one. So you're so right about culture. That might be one of the reasons why. And I actually met a client so long ago. I don't know if you've met a client. I just don't want to mention, what culture or what religion it may be. But they were saying we don't believe in that, and we don't want to build money out of life insurance. Have you encountered that before?
Many times of people saying they want to build money, but not looking. They don't want to worry about death, or they want to say, "Hey, I'm going to save so much money that I don't have to worry about life insurance," right?
Yeah.
And I'm the one group of people that I know, I would say that actually investigate life insurance and want life insurance is wealthy people.
Oh, yeah.
Right. All the groups. I think the more wealth you have, you start saying, "Hey, I want to pass my wealth without the government taking a whole bunch of it." Right.
In fact, that's something that we will be talking about later on, but that's so true. A question of how do you do that? Life insurance in the government, we didn't even touch it. But we'll touch on that later on. But, just piggybacking on what you just said there, wealthy people are the number one people who would want to even put money into the life insurance. Not because they have the money, but because they know how to make use of the platform. So you are so right in that, So they invest in their lives. They look at it as an investment. That's true, right? Okay.
And that's, if you say that, Enrico, I think that's one of the things that people don't look at. Is they should be looking at it as an investment in their life instead of it something that's happening after they pass away.
That's so true. I've seen, or probably you and I, we've seen so much stories, people getting, because they invested so much on the belief onto the life insurance platform. I mean, using the word investment in life insurance is actually not what do you call that? It's not proper. But the investment of the believing into the product is a different story. So what I'm trying to say here is, when we speak to people about life insurance and they see the value and they put themselves into it, and the unexpected happens, now they see the value.
Yeah.
So I think you for those number of years that you've been in the industry, Sean, you've seen people got so much value out of life insurance.
Absolutely. It's I see it both ways, right? Those who have not had life insurance,
that is right.
You see, and I know you've probably seen that too, and the devastation that happens when you don't. And if you don't mind, I could talk about one quick story of that part, right?
Yeah.
Like, because and this is personal. Like my parents did not believe in. Well, my mom, and specifically, didn't believe in life insurance. Can you believe that? So I'm here. I would talk to her like, "No, I don't believe in life insurance," and she believed in being self-insured, right? Like she saved a lot of money. And she didn't believe it. My dad would say he believed, but my mom would kind of stop the process pretty much, right? My father did pass away. Now they did have money, but think about this. why would you want your money to be eaten up, and which happens here, eaten up for expenses instead of it going to the people you love, right? So instead of a certain amount of money that went to her, right, she had to start looking at all the expenses just to bury and take care of my, dad part. And that, outside of the grief and outside of the challenges with that, you're going through all that. Now you're getting salespeople, and this is not being bad about any industry, but there's a sales involved with death, right? Actually, if you saw, what's that? The guy, Mr. Terrific from the what's his name from that show. I'm not even going to say the show, but they talk about entrepreneurs, right? And that they go through businesses. And he always say the two places that you can always make money is weddings and funerals, right? Because people don't think about costs. They always you could kind of like get anything through, right? And if you think about it, that's what happens when you're going in, caskets, flowers, this thing. I mean, it's a whole bunch of costs, and you're in grief, and you don't really not able to make those decisions, and
mentally, you're disturbed.
It's just hard, and you just say yes and yes, and if you have the money, all that money can be eaten up real quickly. Versus having life insurance where you actually take care of that, and then have a surplus going to your beneficiaries. That's that where you really want the money to go. So. I mean, I had lived that firsthand experience with people, even with my mother, and they had money, but so many other people sometimes don't have anything, and they're doing like fundraising and different things like that to try to bury. You know what I mean?
Yeah. So thank you so much for sharing that personal story, Sean. The reason why I would want to, to get people. To not really to believing, but see the value of life insurance and how it will actually help them, especially when the time comes. Not only in financial aspect, but the emotional aspect and the mental aspect that when you lose somebody, you will not be able to think straight. And at least when things are already in proper order, when the time comes, it's not that we can avoid it. It's going to come. It's just a matter of time. And accepting that, it will come anyway. So proper planning right there is very essential. So, let me just talk to you guys. Mga kaibigan, pinag-usapan lang natin dito yung life insurance. Bakit kailangan natin ang life insurance sa ating financial platform? Now, let me ask you this, Sean. Do you consider life insurance as the foundation of, the most basic financial foundation?
Yeah, yes. One thing with life insurance, why I believe is the foundation is because whatever you built on top of that, like let's just say you make a lot of money, and you could protect all that money, because hopefully if you're making a lot of money, you want it to go to your family, right? You don't want it to go to the government. Hopefully. I'm just saying. Yeah, hopefully. Right? So then you can protect that. What if you made no money though? Right? And you're living paycheck to paycheck and you have no real savings or anything really to pass on to your next generation. This is something that you could pass wealth on that's pennies on the dollar.
Yeah.
Right? You could change your next generation future. I always say this, like, think about it, Enrico. If you had a grandmother or someone like that passed away, and you was left $500,000, or your parents were left $500,000 when you was a child. I know you might have been rich anyway, but I don't know. All right. Hey, guess what? Would your life be different if they had more choices and more money? Right.
Definitely.
I mean, absolutely. And that's the difference of having that money. You can make more choices. So you could do that for your grandchildren by leaving that for your children, or when you pass away, or your great grandchildren. Right. So it's absolutely the foundation. Everything else could be built on that. And now you're keeping that within the family instead of going out to other people in the government or wherever else is going to go.
Yeah, exactly. I always believe that life insurance should be the basic foundation. The basic financial foundation before anything else. So life insurance will be here. Probably the next one would be debt elimination, maybe. And then probably the next one would be investments. So that's for me. That's how I look at it, because you can be actually be growing money, but something happens to you. Programs that you prepared before you get to that goal. At least you have something, this basic financial foundation, which is life insurance. You have a fallback. That's very good. I like that. But people don't see it that way. That's why I want to talk about it today, because people usually don't see it that way. They always look at it as like an expense. Can you talk to me about that, Sean?
Well, yeah, because I know a lot of people look at life insurance as expense because they're looking at it more like car insurance, almost thinking like if you never get in a car accident, right? You pay all this insurance money, and that money is not being used, right? It's not having a benefit to you, and they're kind of looking at that, I guess, in the same way. However, if you do this correctly and you get the right type of insurance, you could utilize it in multiple different ways, right? So if you really, really investigate and find the best type of insurance that fits your needs, because there's multiple types of insurance out there. There's not just one type of insurance. And you see, a lot of times that, we could turn on the TV, all you get is like that little thing of this cheap insurance that you can get in 15 minutes or something like that. And yeah, I mean, I get you. I mean, that can be it can be cheap, but you might not get the best benefit for you, right? Exactly. That's why you need to have the ability to talk to someone that could really explain to you the best insurance for your family, and what they can tell. Like, I know yourself and myself, we sold every type of insurance that had been out there, right, to different people, and not one insurance fits all. Like, I believe some people try to say that, or they don't believe one type of insurance is right and the other type of insurance is wrong. They believe that way, and like I'm not going to say those people names. So I'm not going to say don't listen to Dave Ramsey or Susan, or I'm not going to say their name.
You didn't mention that, right?
But you know what? I lived long enough and helped a lot of people that's not the best way to look at that, right? There's a whole bunch of different types of insurance, and the best fit. You have to find what's the best fit for you.
In fact, what you're talking about is about due diligence.
Yes.
Don't just see or don't just believe whatever you see. You have to also do some research on life insurance. Make yourself be educated more into the benefits of life insurance, not just because somebody said it, or even us, we might just tell you guys something about life insurance right now. But again, I would encourage you to look at all of this life insurance platform. I just it just crossed my mind before we talk about these types of insurance, Sean. People will buy phone insurance. What do you call this? A cell phone insurance. They buy that. People buy car insurance. Okay, but I always tell them, you don't buy life insurance. Which is the most important asset? Your phone, your car, or yourself? People will always say, "Oh, of course it's me." Then why don't you protect you? Protecting you is actually not you, but the family that you leave behind. If I buy an iPhone 13 right now, Sean, and then this salesperson tells me, "Oh, you might want to put an insurance on top of it." Of course, I would want to put that. But something might happen to my phone. But now your life, okay, so you might want to put life insurance into your life, and you would say, probably next time. Sometimes the problem with people, sometimes the problem is they don't think that they're gonna get sick. They don't think they're gonna, not gonna die. But we just don't know. That's the reason why this is in preparation for, just for the just in cases, for sudden, when so for this thing, if you die immediately, if I may use that, directly. Okay, Sean, let's talk about types of insurance, because we'd like to debunk again the idea of life insurance. There are different types of life insurance, but probably we can talk only about two types of life insurance, which is the major part of it. Number one is a term insurance, and then the other one is a permanent insurance. And there's a lot of things under that permanent insurance. Can you elaborate those two things for us, sir?
Sure, yeah. So first thing, let's go with term, if that's okay. We could kind of touch on some of the key aspects of term insurance. So term insurance, all term insurance is pretty much have these same type of values to it, right? So number one, term means temporary or there for a particular amount of time. So you're talking about 10, 20, 30 years. Most term insurance, the maximum amount of time is 30 years. That you're gonna lock in the cost of that for that period of time. So the positive thing is that you can lock that cost in, and it's usually a little bit cheaper. And you're just paying that term cost for that period of time.
Okay.
After that period of time, what happens? It ends, and either you're going to have to renew, but you're going to renew at your current age and your current health, or you're going to cost without doing the renewal. Something I have like a year-to-year renewal, but now you have to pay a very higher fee, and a lot of people find that after a while you start becoming, even though it start out cheap, if you're getting a little bit older, it's coming like very, very expensive, right? And also what we found is that most term is going to end at about age 80, in your 80s. Most term companies is not going to keep you insured past 80, most of them, right?
Okay.
Also, a term does not have any cash value. No money is being built up. So it's kind of like renting a house, right? So you're renting a house or renting a car. There's nothing of value. There's no value besides having the item. Now, if something happens, just like car insurance, if something happens, it's great, right? You have that benefit. But outside of that, if nothing happens during that period of time, there's no actual benefit. That makes sense on the term. Anything you want to add with that?
Well, probably
Enrico?
the way the other thing, very good. I actually like the way you explained about term insurance. This is a certain number of years where it will be terminated after that.
Yeah.
So that's the way I look at it.
Exactly.
And I like the way that you said it. Term insurance is just like renting a house, you know.
Yeah.
By the way, guys, there's no good or bad choices.
Absolutely.
If it's a term insurance that you have or a permanent insurance that you have. It's just a matter of choice, and of course, tailor fits it to your financial plan. So that's the reason. At least we have choices, right? So that's what term is. I believe in that. You are so right, Sean. That it's only temporary. So that's how we look at it. Okay, let's just go to the other side of the life insurance we call permanent insurance.
Yeah. So permanent, as you know, permanent means it's there for all your life, right? So I want you all to think about permanent, meaning it should be there for all your life until you pass away. And the one that most people know about that is whole life, but whole life is only one set of term insurance. I mean, not term, permanent insurance. There's come other ones, but that just means that it's there for all your life until you pass away. So the cool thing, so that's the first difference of your permanent insurance versus your term is there. It's going to, like you said, terminate. It's temporary. It's going to terminate. It's going to end. While permanent is there for all your life. It's purchasing your ownership. It's like buying the house, right? Versus renting the house. The other side of that, because you bought the house, now the cost might be a little bit more because you're not just buying insurance, because you're doing some type of savings involved with most permanent insurance in some type of way. Is that it costs a little bit more. However, you have some equity now being built where you could usually access some of that money. Now, every type of permanent insurance is not the same, right? Okay. Just like every house out there is not the same. Some going to value a lot more, some is not, but it's you're going to have some access to some money out there, right? And then basically, you know, depending on the permanent insurance, you're going to have some other bells and whistles that's involved with it, right? That you could get. But the main thing I want you to think about with permanent insurance is that you're owning the house versus renting the house, right? You're owning the insurance versus renting the insurance, and because of that, you're gonna have access to cash value. We call it cash value, in like, which is like equity to the home, and you can utilize that equity if you want to. So you have more access to do more things with it besides just hoping that you pass away before the term ends. Right.
Okay.
Right. Hey, one thing, Enrico, I always say this: with term, you're making a bet with the company. You say, hey, you know, you have a 30-year term. I'm betting that I'm going to die before those 10 years. The insurance company is saying, no, you're going to live. And whoever wins going to get the money, right? And usually the insurance company wins, right?
Yeah, usually
they're like Vegas.
Wins, right?
It wins most of the times, right? Like you're in Vegas, right? So they know that the house, the house going to win most of the time. So so that's just the thing of those two. Now, by the way, Rico, I just have to say this. I have both, right? I have term and permanent.
Okay.
So like you're saying, it's you use it as a tool, and you have the right tool for the right fit.
Exactly.
Right?
Yep.
Just want to say that. So I don't believe one is good or bad, right? It's the best thing. I always say that. I have both. It's just the right fit for the right client.
And for your plan. Yeah. Very good. So, mga kaibigan, mga kap, ang ibig lang sabihin ni Sean, may dalawang klaseng life insurance. Ang isa is a term policy, yung binili natin 10, 20, 30 years. After that, wala na, tapos na siya. You know? Yung isa naman, permanent, as the word implies, permanente yan. Hanggang binabayaran mo yung premium, buhay pa rin yung policy mo. So what Sean was trying to say is, a term policy is just renting a house, and the permanent policy is just like owning a house. Am I right, Sean?
That's correct, yeah.
Perfect. Yeah. So there are more other intricacies inside a life insurance. It's not just the way we know it, because majority of people who doesn't have life insurance or don't want to get life insurance because they only think that life insurance is only used when you die. It's being used when you die because of the death benefit attached to it. But again, you mentioned this, Sean, that there are some bells and whistles attached to the life insurance, especially on the permanent side. What are these bells and whistles that you're talking about on life insurance?
Yeah, so it's several, right? So what I'm going to talk about is number one. A lot of the permanent insurance now have what we call living benefits. So I'm going to start with living benefits. That's in addition to your death benefit, which means like it could be a critical illness or a long-term care rider, or you can have even
terminal.
What's the other one that I'm thinking of?
Terminal,
critical, and long-term care. Is that correct?
Chronic.
Yeah, thank you. I know there's another C in there. They're trying to remember it, right? So now what that means is that you get some bells and whistles where you can access the money if you get sick, or you get ill, or you can't do all your activities that you was living with, right? And get that money to take care of those things. And it's not going to your doctor like health insurance. It's going to you so that you could take care of those needs in your life, right? Okay. And I have had clients that had that. I mean, it's a huge blessing to say if you got diagnosed with cancer or had a stroke or something like that happen, you're getting like $100,000 or what. I had a client that got out of all her debt, was able to pay off her mortgage of the house or all that, and beat cancer, and still have her life insurance left over. Right?
Perfect.
Because of the living benefits of that.
I actually like that. Let's just go back again to living benefits, Sean. So now this is the reason why we want to debunk the stigma on life insurance, because most people think that you only have life insurance when you die. And then again, that you're talking about bells and whistles right now on life insurance, where the benefits of life insurance. One is what you call the living benefits. So, mga kap, meron siyang additional na pwede nating magamit ang life insurance. We can use life insurance in other ways like living benefits. So, living benefits covers 3 or 4. That depends on the company that you are with. Number 1, you told us about terminal illness, Sean. When a person is diagnosed terminally ill, what happens?
Yeah, so if you get diagnosed with terminally ill and diagnosed by your doctor, right, then that triggers, like, depending on the company, could be up to like 90% of the death benefit, right?
Or some is 100% too. They can advance it all, right?
Yeah,
the death benefit.
And some places advance everything, right? I think sometimes they want to leave some over for the death benefit, but each company going to approach that how they approach it. Okay. But now you're able to get that money, and you can like take care of whatever you're doing while you're still alive, right?
Yeah.
Which is kind of cool, right? I mean, just saying, hey, you're gonna pass away, but you can take care of everything you want to take care of instead of hoping that goes to the beneficiaries and they do it the way you want it to be done.
Perfect.
Right?
Yeah.
So that's the great part about that part.
So the money when the person is diagnosed terminally ill, the money, the death benefit, they can accelerate it.
Yes.
You're right?
Yes.
For depending on what company, it can be 70, 80, or 90%, or even 100%.
100%.
Accelerate means they can give you already today, you're still alive, the death benefit because you were diagnosed terminally ill. Is that correct?
Mm-hmm. Yeah.
Oh, wow.
And I show people this video of that where a mother was able to do that, take care of her children college education, able to take care of the mortgage of the home, paid off the home, all that kind of stuff while she was still alive, paid for her funeral costs, or whatever, set all that up, and still have money left over for beneficiaries to keep afterwards.
See, that's the reason why I want people to understand what life insurance is, not only for dying, and you can also still use that benefit to another benefit, right? Like terminal illness. So it's no longer death benefit; it's a life benefit. Living benefit.
It's a life benefit.
Okay,
yeah.
Very good. So you're still living. Okay. So the other one that you said about chronic illness. So this is another part of living benefit. So chronic illness. If you correct me if I'm wrong, there are 6 activities of daily living.
Yes.
If a person is unable to perform 2 out of the 6, it triggers the benefit.
Yes.
Correct.
And that's very similar to long-term care benefits, right? The same thing, same 6 things of daily living. And I usually remember 5 for whatever reason. Remember all 6 all the time, right? And that's but if you can't walk on your own, if you can't toilet, if you control your bowels to go to the toilet, if you can't get on it, cook your own meals, different things like that nature, including also outside of those 6 things. I think memory is also included in that. So if it's like Alzheimer's or dementia or something in those areas, also triggers those things by itself. And which means that if you do that, then you have this stipend of money to take care of your needs. And usually those companies is paying you again as the individual, not the nursing home, not someone else as a nurse. So you're able to take care of whatever things you need with that money. But and that's a great thing with those.
Perfect. So you're talking about chronic illness. So if a person is unable to perform 2 out of the 6 daily activities of daily living, it triggers the policy. So the way I understand it, Sean, how much goes to the person is 2%, up to 2% of the death benefit. So if a person has $100,000 death benefit, $2,000 every month is being given to the person, right? And up until it depletes the whole $100,000. Is that correct?
Yeah, and I've seen some actually as much as 3%, but yeah, like I said, just taking that 2%, that's easy math for me, right? Like you said there, right? And that you get that paid out to you, and the great thing about that is that it's it's something that you can utilize, like I said, tangibly. So don't have to go to medical reasons. It could be, hey, I just feel like I wanted to do this or that, right? It's your money to do some other things. And that also depends on the company and how they do that. But that's where you want to find out from the company how it actually
transpires. Because each company has different benefits and how they would actually accelerate it for the client. But we're just talking about general terms right now, guys. You just want to call a certain company and ask all the details in a particular to what we're talking about. And the third part of the living benefit is what you call what do you call this? Not the chronic, not terminal.
Critical.
We're the critical illness. We're all having senior moments here, guys. Okay, so
we're about the same age, so we both
man.
seniors. Actually, I'm excited to get my AARP card. I just let you know. I'm gonna get some discounts at IHOP. But go ahead.
I just told somebody today I'm 26 years old. Man, all right.
Times what?
Times what? Okay, so the third one is what you call what's that? Let's see, what's it?
critical.
There you go. Critical illness.
Yeah.
Okay. So when a person is diagnosed, depends on what state. There's about 13 triggers of this critical illness. The policy can be triggered from heart attack, stroke, cancer, renal failure. It can be a graft, aortic graft, something like that. There's about 13 of them, right?
You need a transplant.
Okay.
Life thing. Yeah.
So this is the reason why I want to make sure that people understand that when a person triggers, it triggers one of those 13 things for critical illness, it can advance you or accelerate the benefit about 70%. Yeah. Say if you have $100,000, they can accelerate $70,000 to you.
Yeah.
So those are those are the things that we call living benefits that is attached to a life insurance. So therefore, guys, life insurance is not just for dying. You can already use the benefits while you are still alive. So
and one of those things, especially the long-term care or the critical illness, and I just like to turn this personal. Why? Because everyone should think about this. Me and you about the same. Actually, I think we're the same age, 26, turning, for almost 2 times. Right?
You're older 7 months. Okay.
25 almost 2 times. You're 25 almost 2 times, Rico, because you're not gonna make me older than I. Right? Because we're the same year. So 25 almost 2 times this year, right?
That's right.
Anyway. That might have been too much for our listeners, but in that part, what I mean is those benefits are so important because living benefits are big, right? I have a father-in-law that actually is dealing with some, Parkinson challenges, right?
Okay.
And if you don't have long-term care, which he doesn't do, right? It's a high cost. It costs, or you have to go through a lot of challenges to get a nurse to come home. I mean, you're gonna live a long time with some of these things, and why have your money being used up that was going to go to wealth for the next generation versus you're using their insurance money? You know what I mean?
Yeah.
That's and if you get young, it's so cheap.
That's right.
It's so cheap, right? It's like pennies on the dollar. It's again, I like to say this, but it is the best investment. Anyone, and I know it's a different word because it's not really a true investment, but think about it. Whatever you're paying into to get these policies is going to be nothing compared to what is paid out.
Exactly.
Just in those benefits.
Yeah, because we think the same. We think the same, Sean. Because as I always tell my clients, this is the only platform that will give you $1 from a dime that you put in.
Exactly.
So they have to understand that. Nobody gives that, So
Nobody.
So another thing that since we were talking about living benefits a while ago, can you imagine this, Sean? Have you tried? Of course, you didn't do this intentionally, but at one point in your life, you hit your ankle, and then it's just so painful, and you cannot just move. Okay.
Yeah.
Can you imagine how painful it is, and then you can't move? Who's going to take care of you when the time comes that you are in pain and you can't move? Who's going to take care of you? Exactly. Of course, somebody has to. So, but the thing is, that plan should be now. Oh, by the way, I remember a client of mine said, "Oh, my wife is going to take care of me." Okay, that's a good plan. That's a good plan. What if it's the other way around? Right?
Well, you know what? Yeah, you're absolutely right. And how about this one? I don't know about you. I know, all right? I know because we're friends. But if you're like me and our culture, we take care of our seniors, right?
Definitely.
Right? But think about it. If you're going to take care of them, and you don't have any medical training, you don't have any understanding of those details. I understand if they're healthy, there's no real problem, right? But if it get past that, it's very, very challenging.
Oh yeah.
However, if you do what wealthy people do and get these policies, you will actually make or get paid to help your loved one.
Yeah.
Isn't that different? I mean,
it's
instead
a different
of you
mindset.
cutting off yourself from, because I have had people do this where they had to empty out their retirement. I have heard this, like they had to empty out their retirement to take care of their mother or their grandmother, or they had to stop working because their mother had senior dementia, and they can't be left alone, but they couldn't afford to go to a nursing home, right? Yeah. So now they have to stay home. So now, it was a two earning income family, but now you're a one earning income family, right? Maybe one working and one other. But if you had this policy, you should still make money while taking care of your loved one.
Exactly. So it's just about proper planning, really.
Exactly.
It's just hard to position the value to people who has not experienced it yet. But definitely, we will all be in that situation. I'll give you another example. So we had an example of, hitting your ankle with a door. I don't know. It's just so painful. You can't move, right? Try closing your eyes. And start moving. Man, it's hard, man.
Oh, yeah.
Who's gonna guide you? Who's gonna bring you somewhere? Who's gonna bring you to the toilet? There's a lot of challenges along the way when you are in there. That's the reason why, guys, I want to talk about this life insurance, because this life insurance is not only for you when you die, because there are already benefits attached to it while you are still living. Okay, so thank you so much on that, Sean. So we spoke about living benefits. So let's talk about another benefit or another feature that life insurance has. So you mentioned earlier that there is what you call cash value or saving component of a life insurance. Can you elaborate on that?
Well, this is another powerful area that actually people who's been in the know right, have been using for almost a century now to benefit themselves in multiple different ways while they're still alive, right? So one of the cool things about life insurance is that any money attached to life insurance, and I'm going to say this in this way, that means that money, if used correctly, is not taxable, right? Okay. So, and we could dive into that a little bit more, right? But any money connected, if you have, funnel money into your life insurance policy that have a permanent policy that has a saving component or a building money for you, right? That money is non-taxable. It grows non-taxable, so it's tax deferred, and if you use it correctly, it's also not taxable either, right? So now that those components, depending on the permanent policy, there's some very aggressive ways to grow, and then there are also some very safe ways to grow, right? Depending on the policy. I just being very general, right?
Of course, yeah.
So you could actually be very aggressive and go after that thing, and actually be in the market pretty much, right? And have your money grow like the market, or you can have a very safe component where we'll get a guaranteed rate of return, and you're going to be safe from any market loss. But people have realized both any way that you do it is an absolutely great way, either to have an alternative retirement, a way to build a tax-free savings component. One of the challenges that a lot of people have is that they don't have emergency funds or don't have a good place to save emergency funds at, because the saving rates are so low. But if you look at insurance, you could do that and have pretty good savings rate compared to your bank account.
Perfect.
Right? So, so there's a lot of different things to that, but it's just a powerful way to save money. Number one, tax-free, right? I'm going to say that again. Number one, tax-free. That means no taxes.
I like it.
and that's that. I don't know about you, Enrico. That's almost as sexy as you, right?
It's so sexy to hear. Again, tax-free. Again, can you say it again, Sean? Can you say tax-free again?
It's tax-free. Tax-free.
That's really, I'll take it anytime, man. So what you're trying to say here, Sean, is when a person puts a premium, a part of that premium, of course, pays for the cost of insurance. And the other part is where the saving component you're talking about, right? And now this saving component, it will actually grow over time when you take it out. Okay, there's more to it, guys. Mga kaibigan, there's more to it, right? Okay, but when you take it out, it's going to be tax-free, penalty-free. and risk-free. Because what majority of people right now, if ever they put money into, if they would want to grow money, they put it into an IRA, SAP, 401k, 403b, all of this stuff. But we all know all of these platforms are taxable platforms. And of course, it's attached to the market volatility. Okay. Now, if you don't follow it, the rules attached to that, whatever platform you have, there's government penalties that will be, applied. And of course, lastly, fees are also there. Of course, Wall Street fees are there. So what you're trying to say, on the saving component, when people put their money into this life insurance, on the saving component, it will grow tax-free, penalty-free, and risk-free, which is exactly the opposite of what I said. How much is the interest that this savings will grow on?
Well, so that's the cool thing, depending on the plan. So that's where you have to make sure you're talking to a very, your agent and getting a good feel of that, of what to do. So, but the thing is, so for example, you have some, I just like to compare this to your savings in the bank, right? So for example, if you're doing the regular bank account or even an IRA or a CD today, right? You get less than 1% most of the time, or 1%. And most whole life policy is going to give you at least around 2%. So you just made a 100% increase if you was getting 100%, or like 1%, right?
I like the way you think.
But if you, some places do it a little bit more than that, right? So depending on the place, then you have some other ones that's going to give you a guaranteed no loss, right? Of what you're doing. So one of the great things about it is if you want to, like you said, guarantee that you don't lose a dime in the market, you could go through life insurance and make sure that money is there. And also, by the way, this is not a retirement plan, like you were saying, so there's no penalties to accessing the money early. So, and the reason why we say it's not a retirement plan, because retirement plans is connected to your age, right? So if you're younger than 59 and a half, and you're going to get to that money in your 401k, the IRA, the TSP, whatever, like those guys, the 403b, something like that, the 459, you're not going to pay that extra penalty on top of the taxes.
Yeah.
Right. So here, there's no penalty and there's no taxes.
Perfect.
And so that's
who wouldn't like
great.
that, right? Now look at this. We all want to be in that scenario. Like we want to be in a tax-free, penalty-free, risk-free platform. But the question here is, why are we not there? So we're all in a situation where, it's all taxable, attached to the market volatility. There's a lot of fees, etc. But look at this, guys. Mga kaibigan, pinag-uusapan po natin dito yung benefits ng mga ng life insurance, yung naka-attach doon. Kanina pinag-usapan natin ang living benefits. Now, meron din cash value doon na nag-grow na tax-free, penalty-free, risk-free. So we're understanding that there's actually more than life insurance. But look at this, guys. Sean, stay put there because we're going to go back after a little break. I'll see you in a bit. Alright, ang pagbabalik po ng In My Toolbox. Again, if this is if you just came into the show, again, you are In My Toolbox. My name is Enrico Pobre. Pinag-uusapan po natin dito, debunking stigma of life insurance. Kasi marami pong mga tao na of course very doubtful about life insurance. Ano ba tong life insurance ito? Baka mamatay na ako pag bumili ako ng life insurance. I don't want to buy life insurance because it's just an expense. Marami pong ganyang mga haka-haka with regard to life insurance. And of course, our guest tonight, Mr. Sean Toll from Virginia Beach, is actually helping us to debunk this stigma of life insurance. So we talked about a little bit about the benefits of life insurance, not only that it has death benefit, we also talked about living benefits, and we also talked about the cash value inside life insurance that can grow tax-free, that you can access in the future, and you can use it for retirement or whatever purpose that you may have. So let's all welcome back our guest for tonight, Mr. Sean Toll. So we're back, sir. All right.
Man, having fun.
So Sean, I know I'm actually having fun. We've worked together for so many years, almost a decade now, and this is a level up that we're talking about life insurance on a radio talk show.
Yeah.
So very good. So again, as I've mentioned to our viewers and listeners, that we talked about benefits of life insurance already, where we have those living benefits and we have those cash value in the life insurance. So that's actually what life insurance can do, and there are more benefits for life insurance. So. Let's talk about enemies of money first before we dive down into the life insurance. So, mga kaibigan, siguro nagugulat kayo, life insurance? Ba't ang dami ata kayong pinag-uusapan about life insurance? Ang alam ko, life insurance, when you only die, that's it, right? No, there's so much more to the life insurance. So, let's talk about IRC 7702. Let's talk about very specific right now, okay? Internal Revenue Code 7702, Mr. Sean. I know you and we know that the 7702 is a tax code. IRC stands for Internal Revenue Code 7702, where this 7702 is a tax law. Is the law that is attached to the life insurance. Can you give me a little bit of that 7702, Mr. Sean?
Yeah. So I remember when I first heard it, I was like, what are you talking about? This is amazing code. And so people can actually look that up on irs.gov and actually see a little bit more about that code itself and find it. But it's called like a safe harbor, actually. They call it a safe harbor, which means it's safe from taxes. And there's very few items like that. So that code 7702 is kind of like just like 401k, that's an IRS code also, right? All it is a code, and it's basically, long story short, saying any money attached to life insurance is tax deferred, and if you use it correctly, it's going to be tax-free usage of that money, right?
Wow.
So that's a very short use of
7702, right? I also call that 7702. Because 7702, I always tell people that it protects you from against liens, garnishes, judgment, divorce, annulment, and bankruptcy. So I call
Absolutely.
7702 the MC Hammer Law. You know why I call it MC Hammer Law? Because can touch it. Dun, 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 dun. Dun, dun. Dun, dun. So nobody can touch it. It's an MC Hammer Law. Are you kidding me, guys? So
Absolutely.
when you buy life insurance, you actually bought along with it the 7702. So that's the life insurance law. That's the reason why we're talking a lot of things about the benefits of life insurance, just because it started with that number. So you guys know that already, okay? So that's IRC 7702. All right. So that's life insurance for you guys. That's the life insurance law. So now let's talk about enemies of money, Sir Sean. Okay. So I understand the enemies of money are fees, inflation, interest, and taxes. So you will want to tell us a little bit more about those FIT. We call it FIT, F-I-I-T. Okay. So
your fees, your interest, your inflation. So one of the things I always say, and I think you say it well, and we all talk about it. But when you're looking at your investments, or when you're looking at putting money different places, it's not just about the growth, right? Everyone look at interest, like how much interest I'm going to get or whatever. But you also have a look at these other things that's around you, right?
That's right.
You have fees, and one of the things, one of my favorite CPAs in the country, his name is Ed Slott. Right, and he's like one of the top CPAs in the country. He says that investments out there, like your 401k, your IRS, your IRAs, and so on, is that those by brokerage, like investment brokerage, they're not invested, but infected, like insects, infected with fees, right? And they take so much of your money without actually. They have fees. Like I saw this on the trading report, right? Like fees to take. Like if you move your money, there's a fee. If you put money in, well, first if you put money in, there's a fee.
Yep.
If you move money, there's a fee. If you don't move money, there's a fee. There's if you gain money, there's a fee. If you lose money, there's a fee. I mean, there's a fee for your fee,
right?
Right, and you don't even know your fees. You don't even see them. Like
you haven't started yet. You lost money already.
Exactly, right? It's like, what in the world? And so many people, you look and you say, hey, well, how much money I gained? And then you go back and it's like, well, where's the money?
Exactly.
Right? It's all the fees.
Yeah, administrative fees, fiduciary fees, consulting fees. Enrico's fee.
You have a consultant fee, and you haven't talked to anybody.
Exactly.
You talk to the HR person, and they just say, "Look, go ahead and hit the little button."
What the fee are you talking about? But that's the nature.
For you not talking to the consultant.
Exactly, right? But that, and we may laugh about this one, Sir Sean, but we are all in the same system. We're all in it.
Yeah.
So
we are.
Yeah, so these fees are it's just crazy. You haven't started
It's crazy.
yet. The fee can run about from 0.3% to 3.5%. Compute that fee for the next 30 years of your career. That's a lot of money. Okay, very good. Thank you for sharing for that.
Even if you say the point something, that's like per time they do it. It's not like annually, right? It's like okay, you put money in, you got a point something fee, but you're putting money in like monthly.
I know, right? So okay, you call me.
Like,
yeah. You call me Sir Sean, there's a fee. Okay, so you ask me a question, there's a fee. Okay.
Them and lawyers is just like a fee every time.
Oh my God! Yeah, that's why I call my lawyer my attorney fee. Attorney fee, right? Okay, so that's one. That's one of the fit. The other one is interest. You know how I always tell people interest is a deception. This is big to me. When a person buys, say for example, a house of $250,000. Wait. Do we still have a house of $250,000 today? I don't know.
Where are you at? Where? Especially on the West Coast. What you talking about? I don't know.
Probably Philippines, right?
We're going down south. We're going to Mississippi.
South.
If you're in Mississippi, you have just. It was in the flood zone. It went away.
Oh man. Okay. This is just an example, anyway. It's a $250,000 house, and let's just say that the lender said, "Okay, I'm going to give you 6% interest rate." So a person who bought that 6%. Will always think forever that they sign up for 6%. But what they are missing is not that interest. It's the volume of interest that you're all going to pay over time. So that's why I always tell people annual percentage rate is a deception. Because when you sign up for a 6%, do you know, Sir Sean, that 6% is actually 115% interest over time.
Yeah.
That's a lot. Now, let's put that in a context. If you buy a house of $250,000 and you want to pay it for 30 years with 6% interest, the cost of interest is $289,000. That's more than the house that you bought.
Exactly.
That's crazy. And I'm going to give you numbers too, Sir Sean. I don't know if you agree with me on this one. 34.5% of every hard-earned dollar goes to finance charges. Yeah. This goes to your credit card, to your car, to your house, and that's a lot.
That's a lot.
34.5%.
You're starting off with like a subtraction from your actual spending, right?
Yeah.
And I always, to kind of bring it home for you guys, like I put it this way: if you have a mortgage, if you like me, at one time I decided to look at my mortgage breakdown. You probably have done this, Rico. You look at the mortgage breakdown. You say, "When is my mortgage going down?" It's not.
Not only even car note. It's the same. Oh, I've been paying $1,000 every month. Why is the same number still?
The same number, right? And that's people have to be aware of that because they only teach you. I put it this way: they only teach you about credit, right? And I always tell people, I always ask people, why do people want to get good credit? And they say, well, I want to get good credit so I could buy more things. So that's why they only teach you.
Yeah, that's the only
credit,
thing they teach you
right?
about credit.
Not that you should have bad credit, but they want you to get you in these type of positions where you're paying that's 34 cents on the dollar to them and not to you.
You know what's
right?
funny? You're so right.
They become very wealthy from that.
Oh yeah, and people will always think that credit is the way. The fundamentals of economics is not credit; it's capital formation. You have to find a way on how to build that capital. Anyway, so we're talking about that interest. I mean, the interest is a deception. So, hope you guys, mga kaibigan, hope na naiintindihan yung sinasabi namin. It's about the volume of interest that you're going to be paying over time. The other one, let's talk about the inflation. Oh my God! Don't you know, guys? We are in a very bad position today because of aside from Ukraine, Russia war, and the COVID. The other problem that's hitting us right now is called inflation. Yeah. So in 2020, 2021, there's about 6.2% of inflation. So I remember, am I in the Philippines? Because
I heard 7%.
Yeah, it's actually up now, and it's still going to go up. Inflation in the next few months. So inflation, Sir Sean. So let's talk about inflation. So how do we deal with inflation?
Don't get me going on inflation. I think it's a conspiracy, but I won't say that out loud.
No.
Anyway,
oh man, conspiracy. We will not end this show, man.
Don't get me going on that, Enrico. But it's something we have to all deal with, right?
Yeah.
And me and you don't have any control.
Nothing
over inflation. Quite honestly, even the president don't have control over inflation, right?
Okay.
Congress don't have control over the inflation. So we don't really. So without trying to get into all the details of how inflation happens, we at the mercy of whatever that inflation means, which means the cost of goods and services compared to yesterday today, right?
Yeah.
So now if we're at that mercy of that, and we're saying that inflation went up 7% or 6%, or normally it's like around 4%. And your income or your money didn't go up 4%, then you're at a negative.
Exactly.
Right?
Yeah.
If it went up 7% and your money didn't go up 7%, you're at a negative.
Yeah.
So think about people who just saving their mony in their savings account and they're not even getting 1%.
Oh, that's worse.
I mean, they're really behind the 8 ball, right? They like they on that little cliff of the pocket.
What I tell people about inflation, Sir Sean, you're so right about that. When people their money is only earning 1% and inflation is 6%, so you already know the value of your dollar will not be the same the next time. So the buying power of that's not going to be the same. So the amount of money that you buy today is not going to be the same next year. That's why I tell people you have to understand the silent killer of your money is inflation. Yes. You don't see it, but it's actually killing the value of your money. So you need to put your money wherever it is, guys. You need to put your money where there's a capacity to outpace inflation, because that's very important. So logic tells you and me, if your money is only 1% and inflation is 6%, the value is not there anymore.
Right.
Go ahead, sir.
And I say it like this too a lot. Like, let's say, because I talk to people and then, I want to have my money safe.
Yeah.
Right. And they put it in safe places. Like, let's say it's like a CD and you go get 1%. And I'm like, okay, well, you're safe, but you're losing money safely.
Losing money safely.
Losing it safely, right? It's just like, it's a safe place losing money.
Yeah,
it's a safe with a hole in it, because it just subtracts, it's just falling, right? And you're like, okay, well, I mean, when I was younger, I could buy a Coca-Cola for a quarter. Tell me how old I am.
Okay.
And right now I realize that in New York City at this point,
right?
That's
New York,
which is really, really like cheap. But however, that same Coca-Cola can is like now $2.
Yeah,
that's inflation.
Yeah, that's it.
That's inflation. And
that's exactly.
You have nothing. You have no control over.
And the only thing that we can control is to be educated. We educate ourselves, give due diligence, and do our assignments and our homeworks. And understand.
And like you said though, Enrico, you could make education decisions on better places to save your money.
Exactly.
If you don't get the education, you can't make those decisions.
Perfect. I love that. I'll take that, Sir Sean. So that's inflation for us. It's just the silent killer of your money. Okay, and lastly, of course, taxes. Oh my God, of course. Okay, let's talk about taxes here. In a nutshell, probably the way I'm gonna ask you is, how many times do you think is your money being taxed? Many times. See this. Look at this, so Sean. If you're an employee, so before your salary hits the bank, your employer withheld taxes already, and now your money. Okay, you go to the groceries, you pay sales tax. You go to buy gasoline, you pay excise tax. A lot of taxes. Okay, so that's a lot of taxes being charged to you. And don't you know, Sir Sean, 36% of your hard-earned money goes to taxes only, government taxes.
Wow. Yeah.
That's a lot. Now, let's do some math, Sir Sean. Government taxes is 36. Finance charges is 34. 70% already of your hard-earned money goes to those things. This is the reason why I call it enemies of money. So
I agree.
Yeah, so taxes is just a huge bulk of your income. It goes. It's not that because I don't like to pay taxes. So it's just a matter of, hey, we need to understand where our money is going. So probably Sir Sean, mga kaibigan, mga kapano, ang ibig lang namin sabihin dito, you have to understand that there are enemies of money. Now, ibig sabihin, this is how I look at it, Sir Sean. If you know your house has termites, wouldn't you want to do anything about it? If your house has these termites, you will call exterminator the next day you knew it, right? So now the enemies of money, this is what we call FIT. These are the termites of your money. So if you already know that these are the termites of your money, wouldn't you want to do anything about it, right?
Absolutely.
Exactly, Sir Sean. So, thank you so much for sharing me your insights about those, Sir Sean, about the enemies of money. And the reason why I have to inject it, let's just dissect it, Sir Sean. We were talking about life insurance a while ago. So, number one, let's talk about fees. Life insurance, does it have any fees at all? So, what can you...
Well, I put it this way, and you could give me your aspect of it, because every financial product have fees. Okay. Right. If you don't have a fee in a financial product, like 99% of financial products have fees, right? Okay. I know one that every once in a while they say they don't have fees, so I get that. But really, financial products have fees, and that's how people make that's how the insurance companies making or financial company gonna make money. Okay. But with insurance, right, the fee gives you I put it this way. This is the only product I know that the fee give you a benefit. What I mean is, if I have a 401k and I'm paying those fees, there's no actual benefit that comes to me. However, if I'm paying a fee or the cost of insurance for my insurance policy, I do get a benefit. What's the benefit? The death benefit. Yeah. Or the living benefits, right? That's the only product I know that for the fees, I'm going to get a actual benefit from. I
love the way you put it into context. I love that. I'll pay that fee. Okay. Yeah. Okay, number two.
And like you said before, it's pennies on the dollar.
Exactly.
That you're going to get.
Interest for life insurance. We get good interest in life insurance, and that depends on where we put it, right? So
there's some excellent interest. Actually, it's very comparable to most retirement planning out there, or even if you're in the market, like even stuff that's safe, quote unquote safe, where you can't lose money in the market through your life insurance policy.
I love it.
You're getting returns that's very close to items that is in the market. Yeah. Right. Or sometimes even better. Very right. Good. And it's safe. Right. Yeah. So I definitely would say you want to talk to your insurance professional about that. Yes. Because I love that, and those returns are safe, but you're getting some amazing returns
So the interest
your product.
is depends on the product again. It can be variable, it can be index, it can be some fixed rates with dividends. So these are interest that you can get out of that. Of course, another one is the inflation. Does it has the capacity to outpace inflation? You know, some product has, right? Some product has
because if your return is better than inflation, then you're outpacing inflation, right?
Perfect.
So if you're getting a return that outpacing inflation, then you're definitely having that. But and I know where you're gonna go to next, so which is taxes.
Exactly.
So but if you're have the capacity to outpace inflation, and most insurance, the ones that is based to start building money, right, usually have that component available to you.
Perfect. The reason why I mentioned the fit versus the life insurance. Now you would see, guys, the power of life insurance. You know, the way you put it into context there, you're paying a fee there, but there is something that you can get a benefit out of that fee, which is in the form of a life insurance. Oh, yeah, the death benefit there. So basically, guys, you know, we've talked about life insurance the whole hour. You know, the benefits of life insurance is not just, you know, for dying. That's the reason why we would want to debunk the stigma of life insurance, that there's more to life insurance, you know, than just dying. So we talked about living benefits. We talked about the cash value, how it's going to be helping you in retirement, and how it's going to be helping you, you know, defeat the fit or the enemies of money. And there's more to it, guys. You know, we can talk about life insurance, Sean, all day long. But then again,
Yes,
you know,
we
the full hour, it was just so quick. It just, you know, it just came that fast. And
Wow.
again, I'd like to thank you, Sean, for being the call today. I know you're a busy guy, and you know, in just one call, you just told me, okay, I'll help you to debunk that the stigma on life insurance. Any parting words, Sir Sean?
Hey, I just want to encourage people to really understand the value of life insurance from the very basic term that we was talking about, or like term insurance, where you're going to get a death benefit no matter what, and that death benefit going to really benefit you, to living benefits, to all the way to cash value. There's so much richness inside of life insurance. And this is the thing. I also say, I think we had said this early, life insurance would not only give you insurance to give you money and pass it on generationally, tax-free money generationally, to empower that generation. And that's how wealthy people keep generational wealth in their family,
Yes.
or is the quickest way to start becoming generationally wealthy. But also it's emotional insurance that could protect you from the ills of not having money when someone passes away. So I want, and that's a big part too. And that emotional insurance will affect you for the rest of your life. So if you're having money there, it will definitely empower you in multiples of way. And I think everyone should have it, right? And any reason why you think you shouldn't have it is the same reason why you should have it. So I would definitely end with that. And you definitely want to get in touch with someone that can help you with that.
Perfect. Thank you so much, Sir Sean. I love the way you said it. I love the way you gave that parting words to our listeners. Mga kaibigan, mga kap, maraming salamat again. You're listening to In My Toolbox. Lagi po tayong nandito every Thursday at 8 p.m. dito sa PHLV Radio. So ako po ulit si Enrico Pobre, ang inyong financial professional. Siguro may bago na tayong tawag ngayon. Ako po si Enrico Pobre, ang financial professional ng bayan. All right, guys, again, thank you so much for listening to us. Sean, thank you so much. God bless you all. I'll see you again in the next show. All right. Woo!